All right, let's go around the horn and see what's going on in the markets. All kinds of activity today, lots of big moves up and down. Let's take a look first stop the Dow. What's going on there? The Dow Jones Industrial Average Futures down 382 points on the March contract. We're at 33,458 right now. Let's switch over to the U.S. dollar index. It's higher by 541 points on the March futures. We're at 97.235, so it's having a big day to the upside. Crude oil, well, what can you say about crude oil? There for a while, it was over $8 higher. Look at the high, 104.99 today on the April contract. Right now, it's at $103.65 per barrel. That's up $7.93 today. Just wanted to check out another one that can be pretty volatile, and that's your lumber market. And, well, yep, you have the May contract. Limit up $30 higher at $1223.70. Well, let's go to the grains. And on the corn market here with our quotes provided by Bar Chart, you have May corn limit up 35 cents higher at $7.25 3/4. July is trading, it's up 32 1/4. December up 17.5 cents. Soybeans, we had a sale of soybeans this morning, 264,000 tons to China again for deferred delivery. No limit moves in soybeans today, but they're strong. May up 43.5 cents at $16.80 1/4 right now. The July contract up 37.5. You have November now 31 1/4 higher. We're at 14.67. In Chicago wheat, we'll go with that May contract there. Well, wouldn't you know it, it's limit up 50 cents higher at $9.84 per bushel. You have July now up 45 3/4. Kansas City May limit up 50 cents higher at 10.03. July also limit up 50 cents higher at $9.90 3/4. It's been stuck there for an hour or so. On the spring wheat, you have the May 42 1/4 higher at 10.36 1/4. July up 40 3/4. Let's welcome Brian Hoops to the show. He's with Midwest Market Solutions in Springfield, Missouri. Well, Brian, you just have to stand back in amazement at the ability of the markets to just continue to push higher no matter what you're looking at. Well, except for maybe the Dow, but what commodities are just red hot right now.
Yeah, they really are, Marlon. You know, we have a lot of bullish factors at play. Of course, what's going on with Russia and Ukraine is one of the main talking points. We've had a drought in southern Argentina and parts of Brazil. So that's a factor contributing to it. Inflationary markets, inflationary pressures are lifting a lot of these markets as well. So you really have, this perfect scenario where prices are moving higher, sharply higher. In fact, your lock limit in the front month wheat, front month corn. We've got new contract highs in bean oil and corn and in wheat. So it's a wild market, but it's a good market that the prices are moving higher and it's helping out our farmers and our listeners.
Well, Janet had a story just a little bit ago that Brazilian soybean harvest is already like 44% done. Well, even if they get rain, it's not going to help that crop anymore.
Yeah, they're about 42% done, about 10% ahead of normal. And the planting pace, the second corn crop that's being planted behind the soybean harvest, that's also about 10% ahead of normal. So they're going to be benefiting from some rain, if on the corn at least, that's being put into the ground. The soybean crop in northern Brazil not going to be helped out by any rains, but the lack of rain will allow them to harvest more quickly. So they're already ahead of normal. They'll probably stay ahead of normal because there isn't that much rain forecast for northern Brazil. It's Argentina where we still have some concerns. Maybe the crop is stabilized there, but trade is expecting another cut from the USDA in the supply and demand report that's coming up here later this month.
And one has to wonder just how much we're still going to see a shift in acreage here in the U.S. for this year, just because of the possible shortage of fertilizer, shortage of things like, well, glyphosate. I heard yesterday maybe 80% availability or something like that. And
right.
It's going to be kind of tough here in the U.S. this year to get a full crop as well. Well, Brian, we're going to pause here and we'll come back in a moment and we'll take a look at our livestock market action. Big things going on there and some of the contracts too. We'll discuss next. Now we're going to talk a little livestock market action with Brian Hoops. Brian, yesterday I did not see any cash cattle trade listed out in the plains. From what I understand this morning, they're looking at asking prices maybe around 144 or better. Now, that's not really the way we wrapped up last week, although at midweek we did bring some 144s. I think we ended up around 142, didn't we, last week?
Yeah, that 141 to 142 range, it was a little weaker in the southern plains than in the north, where they traded dress cattle at a little bit higher money, actually. The show list numbers are down this week, 4,400 head compared to a week ago. So we're just under 240,000 head, 239,000 head or so. So that's a supportive feature. The weights that we saw last week were down 12 pounds. That's another supportive feature. And if we see weights continue to decrease this week and into next week, it's a very strong indication that we're working through these heavier weight cattle and that our supplies are going to just tighten up because of numbers, but also because of weights declining. So that would be bullish for especially the second and third quarters of this year. So we are seeing a little weakness in some of the front months this morning, especially in the feeder cattle, with the stock market being down and with corn prices being sharply higher. That is weighing on the markets. But from a fundamental standpoint, we may see cash trade steady to even higher in the next couple weeks.
Yeah, we did have the live cattle were higher across the board earlier this morning, but right now, as you mentioned, the April and June have turned lower here. We have April down 42 cents. We're down to 141 even now, June down 40. But you have August on out, anywhere from 10 to 37 cents higher. So that's kind of interesting here, how they're pressuring the nearby contracts here. The feeder cattle market, what can you say? They need a life preserver here with the grains rocketing higher every day. Feeders, we have the April now down $2. We're at 160 even per hundredweight, and that's almost $2 off of our earlier high today. The feeder cattle, you look at a chart, are they getting anywhere near support right now?
Yeah, yesterday they dropped sharply onto support and kind of bounced into the closing bell to pair some of their losses. And so we're back down into the lows that we charted yesterday. So that is good support, and that may be enough to hold this market. It's surprising with the corn being as high as it is that feeder cattle will find some support. But we've heard from some sale barns here yesterday and this morning as well. Cash is pretty high. The sales are very strong, and demand still remains high for these feeder calves.
Interesting. All right, now let's flip over on lean hogs today. It is National Pig Day, and they've had quite a session here. They continue to surge ahead as they try and find support. Right now, the April lean hogs are quoted 202 higher, and we're at 105.52. And the May leading the way. It's up $3.10 right now. So every time we check the lean hog market, it continues to add to the gains as we go through the day. We'll keep tabs on that as well. Brian, great information. Thank you for joining us. Appreciate it. Brian Hoops, Midwest Market Solutions. With that, Janet, it's all yours.